Okay, as I mentioned to you just now, there are three types of financial capital. Right, the first one is debt financing, the second one is equity financing, and the third one is specialty financing. But for the purpose of this topic, I will explain to you. I will focus on these two main types of financial capital, which are debt financing and equity financing. Okay, for debt financing, here I put a picture of loan here. So this is in order to easy for you to remember. Debt financing is about loan. Right? Can be a loan from bank or leasing, right? Sewa. You pajak leasing, hire purchase is sewa beli, or overdraft. You apply overdraft from the bank. You apply credit card or private debt from your family, friends, or credit agency. So these are examples of debt financing. The equity financing is there are two types of equity financing. We have private equity financing and public securities. Right? Private equity financing means especially for the early stage venture, right? The early growth stage venture. Normally, they will sell their shares or part of the business to other entrepreneurs, or they sell to their family and friends, or to business angels and venture capitalists. But for maturity or later growth stage company, they will issue a public securities. For example, stocks, bonds, options, or equity crowdfunding. So there are two types of equity funding here, private and public. Okay, remember, private is for the early growth stage venture, whereas public securities normally will be issued by a successful venture in the later growth stage, right? Okay, now let's look at how entrepreneurs finance themselves and how investors invest their capital. It means what types of markets that entrepreneurs can use to trade their financial capital. That means either by applying the financial capital, obtaining the financial capital, or by issuing the securities. Right, there are through a market. We call it as a capital market. There are two types of capital market. The first one is unlisted private market. The second one is listed public market. Okay, public market. But what is a private market? Private market involves the issue and sale of illiquid, less standardized financial contracts and securities, right? And types of financial contracts or securities is bank loans, right? Or private debt from credit agency, for example. The bank loans is from bank, of course, from a financial investor. And the third one is through private equity financing. As I mentioned to you just now, equity financing, we have two types of equity financing. The first one is private equity financing. The second one is public equity financing. The private one is through by selling a part or shares of the for shares of a venture to entrepreneurs, family and friends, right? As well as to business angels and venture capitalists, right? So these are examples of types of financial contracts or securities that are traded under a private market, right? How they trade? They trade over the counter, OTC. Over the counter means can go to the bank or go to the entrepreneur's office, or just by through meeting with the business angels or venture capitalist office and selling the securities, right? Who involved in this market? Normally, the early stage venture, right? Either as an investor or as a buyer, right? But not for the later growth stage venture. Okay, this is because early stage venture they not able to tap on the public market because they still early in the financial ability, right? So these are private market. Okay, let's look what is public market. Okay, public market involve the issuance, buying, and trading of standardized liquid securities. This one is more standardized and liquid. So examples are stocks, bonds, and options. This one is public equity financing. The private equity financings normally they traded in private market through OTC. But for public market securities like stocks, bonds, and options, they will be traded in a public market in a stock exchange or primary board. In Malaysia, for example, we have Bursa Malaysia. So all the options or stocks, bonds traded in the Bursa Malaysia primary board, papan utama. So these are examples of public market. So normally, a successful, well-established company, right, in the later growth stage, right, will invest, right, will invest as well as will issue, not as not only as issuer, but also as the investor uh, for this public market financial capital. Okay. All right. Logically, when we secure a loan or when we buy shares, right, we will bear some cost, right? Cost for securing or cost for investing, right? The shares. So this cost, we call it as a cost of capital, right? There are two types of cost of capital because, as I mentioned to you just now, we have two types of financial capital, right? The first one is debt capital, the second one is equity capital. So therefore, both capital have the cost to bear to be borne by entrepreneur, right? The first one is cost of debt capital. The second one is cost of equity capital, right? Or cost of debt capital, because debt is relating to loan, so that's why normally the cost we call it as the interest rate, right? Normally there are two types of interest rate when we apply loan. The first one is nominal interest rate. The second one is risk-free interest rate. So we will look through after this one by one what the meaning of both interest rate. The second types of financial cost of financial capital is cost of equity capital. So as I explained to you just now, we have private equity capital and public equity capital. So the private equity capital, also called private equity investment, right? The entrepreneur who invest into these types of private equity, they have to bear advisory premium and liquidity premium. So these are the name of the cost, right? The second types of equity is public traded stock. Those entrepreneurs who are in the later growth stage or we call it as a seasoned firm, normally they will sell or buy a public traded stock. So they have to bear this cost. What are the name of the cost? They are investment risk premium or IRP or market risk premium MRP. So I will explain to you what are these cost of capital.